Hey, my friend, today we are looking at having a death cross stock market action. And yes, it is officially here. We do have the ominous death cross. Sounds like something out of Star Wars. But actually, it is a very well-known technical analysis pattern. And it's actually pretty darn simple, which makes it even that much more scary to some people. Because when things are simple, a lot of people look at them, then they tend to have a self-fulfilling prophecy, and we'll talk about that in here in just a moment. But first of all, what is the meaning of a death cross? It's a couple of moving averages, and in general, you could say that it is when a short-term moving average crosses below a long-term moving average. But normally, it's referred to as two particular moving averages, and those two moving averages are the 50 period simple moving average right there, and the 200 right there. So the 50 simple moving average is the green one, the 200 is the magenta one on my charts, and there we have it. Boom, the death cross. This is on the S&P 500, by the way. So yeah, now that normally is thought to signal a very, very, very bearish market where people are freaking out, saying, uh-oh, we're going to go down. Now, actually, let's look at that a little bit. Let's look at it historically, and let's see if that is actually true. And then I'll give you some actual statistics. So let's zoom all the way back as far as my charts will go. So let's see. So there we go. Okay, so this would be the first death cross on this chart. And again, it is where the green moving average S&P or the 50 SMA crosses below the 200 SMA. And a nice little trade here. So that is the actual point when you get the cross of the moving averages. And I kind of like it when you do get the moving, or when you get price coming back up into that. Not a bad little short signal there, because again, those two particular moving averages are watched by everybody and his gerbil, or everybody and her parakeet. So again, part of it is a self-fulfilling prophecy that, hey, people are looking at these levels and therefore they are buying and selling and taking profits and placing stops and all that kind of stuff around these areas. So, hey, there's no magic to technical analysis. A big part of it is mass psychology. So, okay, very good. But does it lead to a big bearish market? Well, let's see, pretty bad. Yep, not too good, no bueno. But so we go down from, where were we, up here to around 1400, just going to use round numbers, 1000. So yeah, that's a big fall. That's a big fall in the markets. Whoa, it dropped down even further, goes down below 1000 there, comes back up, and still we don't get the cross. You know, price is going above, but that's not what the pattern is there. It goes back down. Oh my gosh, went down to 800. So you know what? God dang it. Yeah, that would have kept us out of a world of pain way back there in, as Prince would say, 1999. So yeah, that would have been a sweet thing to do. All right, let's look for the next death cross here. And there's where we get our next death cross. All right, boom, right there. All right, now this time, the thing to note is that price keeps coming up and gets back above the moving averages. So one thing I want to say here very clearly, and that I always say, is that we never use any one tool by itself. So no one price pattern, no one moving average crossover, no one nothing, no one indicator, no one candlestick bar, no one anything is going to give you a probability and scenario. And that includes the infamous death cross. So we get a cross here, but gal darn it, market comes right back up and it keeps going up. So if you would have traded just purely on the death cross, man, you were screwed. Yeah, you were screwed bad. Okay, so no bueno for that one. All right, but that's why we don't look at any one thing. We get almost a death cross here, not quite. Okay, they don't cross again. Remember, moving averages are very slow. They're lagging because they are averaging out, and here especially averaging out over the period of 50 and 200 bars. So really really lagging. All right, there again, another death cross. How well did that one? If you went short right there, it just said, whenever there's a death cross, man, I'm just automatically going to put a market order in and tell my broker to, buy a bunch of naked puts. Really bad idea. Really horrible idea. Oh my gosh. But anyway, if you just decide you're going to be bearish whenever that happens, again, very, very wrong in that situation. So that signal did not work out well at all. And the thing goes screaming up, screaming up, screaming up, screaming up, almost get a death cross there. And now we get one back here in 2008. Notice again, though, a similar pattern that we had on the last one that actually did work. So we get the cross of the moving averages, price goes back up to them, and then comes back down below them again. And to me, that's one of the things that you could look for if you want to trade these death crosses. All right, so look at price action in relation to the moving average. I'm not a big proponent of moving average crossovers, but again, you can use them in certain situations. Just use them with other things if you want to. By themselves, I don't think they have a whole heck of a lot of meaning unless they're major moving averages like these two, which everybody looks at, and then they become a self-fulfilling prophecy. And then we just look at price action around them, and then we make our trades. All right, so again, would have saved you if you were to stay bullish during that whole time. Yeah, that would have saved you a lot of money. This is not so good. And we go into a nice bearish market. All right, we'll come back on up. Now, another death cross there. Okay. All right, now again, what happens there now? Look, we come back up into the 50 MA. It comes back down, comes back up. Oh, we're getting a lot of choppiness, aren't we? Getting a lot of choppiness around this. Probably because a lot of people are looking at the death cross, and you got some people who are saying, yeah, I'm going short when it comes up to the 50. Other people, when it gets up to the 200, that's when they are going short. Plus, we're at this high here. So they're looking at that high, and they're going short off of that high. So this is the psychology. This is the reasoning that's going on. And the death cross, again, is a very well-known pattern. But overall, the market decides, nope, we're going to go up. By the way, another thing to look at here, which is very telling, is that when we come down and make this, look what happens. We just barely take out the low of this swing low, which a lot of people are going to be looking. None of the highs of these bars are actually below that low. And that's pretty typical of how the markets work, just enough to kill the breakout traders, right? People are going to say, well, I'll tell you what, I'm not going to trade the retrace. I'm going to trade the breakout of that low, and then they get slaughtered. And that's pretty much how the market likes to do it. Yeah, market is not your friend. All right, and then we come up another death cross. Oh my goodness, now let's see what happens. Well, we don't get the kind of retrace that we had before, so it just kind of goes sideways choppy. It doesn't come all the way back up here, in other words. Right, that's the pattern that we liked, where we said, okay, that one served us well a couple of times in the past. And so we don't get that. And I'll tell you, I don't really love these patterns that just go straight to the downside, these very, very steep moves, and then just trade a shallow retrace. In fact, in TopDogTrading, we say you do not trade the first retrace in a trend after a parabolic move, and that's exactly why. All right, it goes back up, and I think that's going to be all she wrote. Oh, no, that's right. We had this one here. You can see the dates down here. And, yeah, this one, again, was a horrible one. But, again, we had another, parabolic move down, very strong vertical move down. And, again, one of our patterns in TopDogTrading is do not trade that first retrace after a parabolic move down. We basically just put in an equal low. That is not a double bottom, by the way. And then we go back on up. And then, and now look, this is very interesting. So here, good, I got both of them on the chart at the same time. Wow, I forgot about this one. So we got a death cross there, and we got another death cross there. So this is the thing with moving averages in general. They can provide some choppy signals like this. They're very late. They're very slow. And that's why I don't really trade moving average crossovers much. Unless we retrace right into the cross, then I might trade those as long as everything else aligns. But again, we don't. Parabolic move down. Here's the same principle. Not going to short that for the exact same reason we already talked about. And then it's back up off to the races. So those who have taken my Top Dog Trading course, you know what I'm talking about there. So anyway, and then boom, up, and now this is our next one. Now this time, notice that we did retrace right to the cross. So now what we're dealing with, all right, so if you shorted that, that would have been a decent pattern to trade, to go short. It worked out a couple times for us. Now you still got to manage your money, right? You got to manage your money. So don't just assume that now this thing's going to tank for the next 25 years. Well, I'm sure it's not, but that's my opinion. However, if you took a quick short there and you took some profits, well, we've got support right here, don't we? And that's where we found support. And then we've got a boom, nice candlestick pattern there. We've got resistance right here. And so that's what we've got going on in the market right now, quite frankly. All right, we've got, we put in that high there, low there, high there, low there. We're basically in a sideways channel is what we are in, and come off of that a little bit. So if I'm trading this, I'm definitely taking profits. In fact, in daily charts like this, I almost always take profits around the 50 and the 200 MA if I've got a profit in the market, because the markets really do respect these levels, as you can see, over and over and over and over. And right now, that's what we've got. That's all we got. So nobody knows the future. So if you have a bearish sentiment, that's okay. But what I like to do is take some profits on the way to my long-term destination. And that way, if the long-term destination doesn't turn out, I could still make a little bit of money or get a scratch trade or whatever. By the way, if you would have traded death crosses all the way back on the S&P 500 back to 1928 to the present, according to the stats that I have seen, you basically, it's, wouldn't have made much difference. With costs and so forth, you might have even come out a little bit worse than buy and hold. So if you're looking for long-term stats on it, the stats that I found are back to 1928. It really did not outperform buy and hold when you incorporate expenses, which you have to do, obviously. But what it would have done is smoothed out volatility. So you wouldn't have suffered those big down moves. And that could be worth a lot, right? That could be worth peace of mind. So there you go. I'm going to do a follow-up on this. And in the follow-up video, we're going to talk about the golden cross. And, well, I'll leave that for the next video and keep you waiting. That's a little cliffhanger for you. So if you found this video helpful, if you liked it, if you like the videos that I'm putting on here on YouTube, I got over 200, no, I don't know how many I have. Anyway, it's over 150. I think I'm closing in on around 200, but it's a lot. So I love doing these videos for you. And if you want me to keep doing them, feel free to give me a thumbs up, leave a nice comment, share it with other people. There's a nice little share button below. That's the best thing you can do, is share good things with good people. Also, I have one of my trade courses that I'm going to give you absolutely free. And in that trade course, I include one of my favorite trade setups. And this is a trade setup I actually take pretty much every day. I love this trade setup. I'm still taking it to this day, and I'll give you that for free. Hopefully you can take that and start making some money. Just click the little icon in the top right-hand corner of the video, and that'll take you to the page where you can register for the free trade setup and the free trading course.